Hello, hello, hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Um, just trying to go ahead and make sure we're all good here. All right, guys. So let's just fix up a couple of things here. Let me just turn this off. We're going to go ahead and talk about a couple things right now. Just getting all ready and set up here. All right, guys. Hope you're doing well. Welcome now, Stock Trades. Hey, it's Melissa's birthday. Shout out to Melissa. Happy birthday. Happy birthday. 50 is a new 25. Let's go. How are you guys doing? All right. So, as always, we are an educational platform. Nothing we say is financial advice. This is an educational platform only. I'm not a stock advisor or a financial advisor or license or anything like that. So definitely take heed to that and understand that we are all about education. All right, guys. So what I wanted to do is I wanted to, by the way, I hope you enjoy this view. It's actually looks a lot better during the day. Just busy, busy, busy. So hopefully we'll be able to enjoy it some other time together. But I'm enjoying it. It's really beautiful. All right. So what I wanted to do is I wanted to take some time right now, and I wanted to just by the way, also I'm drinking a nice sangria right now. Very nice, especially on a hot day or humid day. So it's been pretty good. So I got my little beverage out here. All right, so I wanted to just go ahead and talk about a couple things regarding emotional cycle. We're going to talk about in this video some things that'll increase your intelligence for investing. We're going to talk about the this is my real estate business that I'm developing. We're going to talk about the options chain for Clover. We're going to talk about some things in regards to earnings per share for Humana, and we're going to talk about a lot of Peter Lynch stuff. So definitely going to be one of those good lives here. So, instead of going ahead and reading all this, we should technically, but it's just I recommend you do read it. I'm just going to explain it to you. So in life, regardless what you basically learn, you go through 5 stages. You have the uniform optimism, stage 1. People that tend to start things in the beginning, they're very excited. Think of your New Year's resolution. You're very excited. You're trying to lose weight, but ultimately your emotional stage is pretty high. But the time you've done whatever you're trying to change the behavior, you haven't really done a lot of it. So you end up chugging along, and then you realize how hard this is. So you become informed pessimists, right? You realize, right? And then all of a sudden you get to a point where you get to the valley of despair. Now, a lot of people tend to basically stop here and find something else that's new. Uh, and, and they just kind of in life, they cycle through these 3 stages and they don't really become a master. Think of somebody who's trying to learn about the stock market. They go through all these technical analysis skills. They go to, all these different types of things, all these, Lux algo, and trying to just go through different types of strategies, right? And they go through these different, they try this strategy. They realize it's a dead end, and they try a new strategy. Then they say, well, maybe if I add all these strategies together, and they just go all back and forth. A lot of investors, what they do is they start off with technical analysis, and they go through this kind of area until they hit this valley of despair, until they say, you know what, I'm done. I'm not really going to be doing this. This is stock market's a scam, and then they stop, right? Um, so there's another way, and there's people that push forward, right? People that go from a valley of, and this also goes in medicine. In fact, this is how surgery residents are trained, right? They go, I mean, anything really, but it's really surgery. It's the Dunning-Kruger effect. They try to get done with this by medical school. So you start off with despair, but really though, you start off here, and then you come here, and then you grow into a competent surgeon. So ultimately, you kind of go through these stages, right? But let's say, for example, you get to a point where you go in and you push forward, Um, you push hard, you become an informed optimist, and then you become a master, right? And a lot of people they don't do this, right? Oh yeah, I love the little different setup today. Yeah, we're changing it up a little bit. I'm just need a little bit of outside air, and some sangria, some nice alcohol, right? I need a drink this week. I really need a drink this week, guys. I don't really drink, but I need a freaking drink this week. And I know this is like a ladies' drink, but hey, right? And I love sangria. Yeah, honestly, I love sugar. That's the problem. um, hmm. But yeah. So appreciate you, Rapella. 1 a.m. Oh my God, I need to speak faster. I'm sorry. Sorry. I could use a drink too. Might pour one now and enjoy with you. Hey man, cheers, brother. Cheers, brother. Right. Hope to see you guys soon in Turning Point, USA in Arizona. Right. We'll get that shit popping. Okay. I know a lot of political people in Arizona, so I'll reach out to them when the time comes. Okay. Um. So. So now let's go ahead and just talk in general about um, kind of going through a storyline. We're going to kind of talk to a story now. I wish there was a beautiful view, but that's what we have right now. It's a beautiful view of the night sky here. So, um, what I wanted to do is talk a little bit about Peter Lynch's life. I'm going to talk about it from rote memory here. Um, and then I'll kind of proceed to what I want to talk about. But uh, Peter Lynch didn't grow up um, wealthy. In fact, he grew up actually poor. His family grew up in the Great Recession. We're talking about the 1920s, right? The 1929. Um, he grew up in the best. He grew up in really not the best time, sadly, but he saw that his family members didn't talk about stocks. They thought stocks was a gamble. And it wasn't until stocks were considered, in the 1930s and 40, really 1940s and 50s, stocks were considered like the plague. You essentially, um, I'm trying to figure out the lighting here. You essentially um, were looked at by talking about the stock market as like psycho, right? And sadly, those were the more opportune times to talk about the stock market or to invest because by then it was the best opportunity to buy stocks, the best, the best. So Peter Lynch grew up in that area, and he kind of grew up in that environment with his household. But then something truly remarkable happened. He started to, and by the way, guys, just so you guys know, I've been I'm trying to figure out this lighting here. Every time I change here, it's a little thing here. I've been reading a lot of Peter Lynch's books. I'm rereading them. I read them before, but rereading something after having all this knowledge, it like hits differently. You pay attention. It's like you rediscover the book, and it's almost like I'm sitting with Peter Lynch and I'm talking with him in real life, which is like he's still like here. God bless his heart, but it's like he's sitting next to me as I'm reading. So Peter Lynch, it's funny how he grew up. Started being a caddy. A caddy is, and I didn't know this until um, my father-in-law purchased a golf course. A caddy is when somebody assists you in carrying your golf clubs, right? And he started following along these people, right? These wealthy people, people that worked on Wall Street. And he started like basically following them along, carrying their golf stuff, right? And they were talking about the market. And then Peter Lynch was saying, well, why are they so positive about the stock market? My mom and grandma used to hate the stock market. And then he started looking at their lifestyle. Like these people have money. So apparently the stock market makes you money. And that was fidelity, right? So then ultimately he worked hard. And then he went in, and the most beautiful thing, he went in and he it's very cool. He worked as like the bottom person on um Oh no, you're fine. He worked as the bottom person in Fidelity, like just like kind of the he did all the scut work, right? And then little by little, he went ahead and made a name for himself. Uh, thank you, appreciate. No, no, you're fine. Thank you. I appreciate you. Oh, that's well fine. Appreciate you. Thank you. Um, so he went in and um he started from the bottom, right? And he got this internship position. And at the same time, he then went to Wharton Business School. Now, if you don't know, Wharton is like a top business school. I want to look. I'm curious to see right now. Wharton Business School ranking. I don't know the ranking here, so I'm just curious to see what is the ranking of Wharton Business School here. So Wharton Business School is the number one business school in the United States. So it is considered the best business school um, in our United States. So let me just go ahead and just kind of put this here so I can zoom in a little bit here. It's ranked number one, right? And you would think that he would be optimistic about what they were teaching. But what's interesting is, do you know what um, Peter Lynch said in his book? He said that he had to, cause a lot of the professors at Wharton, they were basically saying they were talking about the market efficient hypothesis. They're like everything in the stock market is known, and it's hard. You cannot, in a reliable fashion, make money in the stock market. And he was getting all this information that was opposite because he started off as a caddy, then he worked at Fidelity as the bottom scout worker, right? And then he then went ahead and then went to Wharton Business School. So he already saw Fidelity and all these people making all this money, right? Picking stocks, stock pickers, right? And then he uh, um, went ahead and I heard something. He went ahead and uh, was like, "Wait a minute, that's weird." They're saying that you cannot predictably and reliably make money in the stock market, but he was like, "That's a bunch of BS." Fidelity, I got to show them what Fidelity is. So, in his book, he talked about how he realized that he had to unlearn what was taught in Wharton Business School. Can you believe that? He had to unlearn what was taught in Wharton Business School to unlearn what was taught. He said that literally in there, right? And this is number one business school in the country, in the world, right? I'm going to take a little sip of my drink here, okay? And I'll go in the comment sections. We will talk about this comment right now regarding October. We'll see. I'm not really too confident in that, but who knows? Uh, Al deserves it. He gives his all to the platform. But I appreciate you, brother. Appreciate you. Thank you, Al. Most underrated channel. I appreciate you guys. You guys are the best. I love you guys. No, this is a really cool story. So he realized, he's like, wait a minute. He's like, I got all these people making all this money in stocks, and this guy's telling me he's a professor that you can't make money in stocks. It's very clear this guy doesn't know what he's talking about, right? It's like, think about it, right? It's like you've seen my channel and you kind of seen what. Listen, guys, I didn't create any of this information. All I did was just create the stock terminal that gives access point to Wall Street, so you guys can get the data. But you can ultimately see everything that I've learned was from these millionaires and billionaires, right? I read all their books, and I read them like 10 years ago, and now I'm rereading them again, so I can because in the next, so we still are in beta access, hence why we're going to be increasing prices on lifetime access. But I'm rereading all these books again. I'm gonna read. I'm about to already finish one of Peter Lynch's books, and it took me 2 days. And when I read something, I retain about 80% of it. When I take notes, I retain about 95% of it. Um, so then I take those notes, and I integrate them, and I say, oh yeah, this will be a good to talk about. So when you take my course, we have access to the data, but really you need to learn how to use the data. So when you take the course, it's going to be almost like you have read all of the books of all the billionaires and millionaires in the world. Every millionaire and billionaire that wrote a book about business is going to be integrated. Their philosophy is going to be integrated within our lifetime access, right? And it's taking all that information and all that time that you would normally have to spend, which took me a long time, and then be able to put that so you were able to go to zero to hero. But check this out. So he finished Wharton Business School, and then he came back into the Fidelity, and he was given a fund, and the fund that was like, as soon as he like got promoted, he has like he has this philosophy. Every time he gets promoted, there's a stock market crash, or every time he moves, there's a stock market crash, or every time he takes a vacation, there's a stock market crash. So he got promoted, and and a stock market crash happened, and his boss said, listen, Peter, I need you to go ahead and sell a bunch of these stocks. There's about 50 stocks or 40 stocks. I need you to get down to 20. So he was his book was like, he was saying, I listened to my boss and I actually bought 150 stocks. And it was like so funny. And you would think that this is diversification, but he's actually against diversification. But his which is kind of weird, right? His philosophy is that if there's a lot of undervalued stocks, then you go ahead and you purchase them, right? So that's what he did, and he found multiple 10 baggers, 50 baggers, 100 baggers, 200, and missed 200, and sometimes missed 500 baggers. But he went ahead and he basically talked about, and by the way, I'm reciting all this from memory. Like, you want to see my screen? This is what my screen is. This is my screen. It's pretty, again, this is all from here. Okay. And I'm just like dispersing this information, right? So my community can move forward, right? Because I'm sick and tired of the poor getting poor and the rich getting richer, right? It's time for people like us to win. Okay. Because I want you to enjoy a view like this. Okay. All right. So right. So check this out. All right. So this is really cool. Let me see. What part of the story? Okay, so he came in and okay, so this is what he said. All right. He said that you guys, all of you in your industries that you're in, right? You could be in the trucking industry. I'll give you let's just like use an example from the book. So it's like you've already read the book. I'm giving you like the good points, right? Let's say you work at Pep Boys or AutoZone. Use Pep Boys as an example, right? Pep Boys or AutoZone, for people that don't know, is they sell tires, auto stuff for cars. You know what I mean? And let's say you notice something. You notice that these tires, Goodyear tires, everyone's getting them. Right? I'm sure you know what Goodyear is, but back in the day, no one knew about it. You're like, holy shit, everybody's getting these tires. There's your signal. You think Wall Street knows that signal? No, of course not. They don't know that signal, guys. Come on, right? So the next level of an intelligent investor would be to say, well, okay, I know that this is a popular tire. Now I'm going to go ahead and look at the Goodyear company. And I am going to go ahead and analyze the company. And I'm going to look at their balance sheet. I'm going to look at their revenue, free cash flow, all this stuff. Problem is, a lot of people skip this step. People misunderstand Peter Lynch. Oh my God, there's a business that has a long line of customers. I'm going to go buy the stock. Don't do that. I'll give you an example. Remember back in the day, to all my boomers out there, remember when those old computers, they used to have Intel inside? In fact, let me just, we have the internet in front of us, the most powerful thing in the world here. Let's go ahead and look at the internet. I'm going to say 2000 and, or let's say, let's make it simple. 1998 computer tower, Intel inside sticker. You remember back, for people are not going to really remember this, for if you're like born after 2000, you might not understand this, but back in the day, you used to have oh my God, this is just amazing. Okay, so oh my God, this is exactly what I was looking for. Okay, so you remember these towers of computers? If you were to zoom in, there used to be stickers on here, and they used to say, you see how it says? Let me just kind of take a screenshot so we can zoom in more. It used to say Intel inside. Intel inside. Okay. So if you were to have known that, you could say, okay, there's an Intel inside of this computer. I'm going to go ahead and do a little bit more research with Intel. Okay. Um, so if we were to look at the Intel historical stock price, um, this goes all the way back to, this is fine. This is the Intel stock price. Okay. Um, Lulu is part of our portfolio hedging modeling system. I shouldn't be releasing this because paying members pay for this information, but it has not been doing that well. But yeah, um, I'd have to take a look at it again. But again, it is part of the intrinsic. Hedge funds do like it, but we'll see if it's changed. But look at Intel. Intel used to be a 53-cent stock. Obviously, it was a lot higher because of the pre-stock adjusted split. But look, it used to be look, and then look how it shot up. You see how it shot up, guys, and now they have problems on their own that AMD and Nvidia has taken over. But let me take a quick second here, and let me just uh uh oh, I see Michelle here. Albert, brain and grind is insane. I'll wake up in the morning and he hasn't even slept yet. He'd be like, "Oh, I finished another book last night after I coded." I just when you have passion and you love something and you see that what you're creating and what you're doing is actually can be impactful to help people, um, I don't know, man. God gives you energy. Who knows? I don't know what it is, right? So love you guys. All right. All right. So let me go ahead and okay. So where was I? Okay, so Intel sticker. So you as a person who's a consumer, um, you know so much. You're so smart, right? Really, you really pat yourself on the back. You are so smart. Okay. So you know things like Salad and Go. Who knows? I don't know. Or like Netflix. You saw Adam Sandler like start coming in on Netflix. Like you saw Netflix. You used the product. You're like, damn, I like this product. Right? You guys have a lot of data, like Mass of the Chin, right? Your family member is using Clover. You at first hand saw the value of Clover, right? You know the the um you know the business, right? You are the end product user. So I'm just going to go ahead and I'm just going to give an example here so we can uh remind ourselves what Vivek said, because I think Vivek is hinting at this. And I think, it's my obligation to be able to just keep talking about this because I think it's just very important, and it really increases your investor IQ points, right? So these are simple things. Okay. So Vivek said, Vivek is the co-founder of Clover Health, right? Simple things investors many times don't do, especially for businesses where the end user or buyer of a product is an individual like Clover Health. Look at the product they sell. Compare it to the competition in terms of price and value. If you determine the business you like offers its product at a more attractive price and higher value than the competition, then go to step 2. Let's just answer this question real quick. They offer PPO and it's the best PPO out there while others don't and others are retracting. Okay. Step 2, see how their internal margins are. You see, now you go to the, like I said, you're in the product user, see it, and then now go to the balance sheet, statement of cash flows, margins. He just broke it down the margins. See the internal margins compared to the competitors. If they are the same or better, then go to step 3 and ask yourself why. Okay, so yeah, Clover Health. Remember Michelle was talking about the margins here. Remember, they're one of the best, right? And then you talk about why. And is this why a competitive advantage? Is it a moat? If you choose to pass, then you're probably a bad investor, right? So, so now let's go back to Peter Lynch. I just wanted to just kind of like give you a 2025 example, right? Because this post was posted on June 27, 2025. Okay. Right after I think we figured out the subdomain. Shout out to Apollo. All right. So now let's go ahead and talk a little bit more about Peter Lynch. So Peter Lynch then talked about how you have so much power over Wall Street because Wall Street can't really invest in these companies until, especially, like if they're doing really well, but they're like, under $5 or under $10, and just kind of a small company, really. Wall Street has a hard time investing in it because, again, everyone has, a lot of people are telling me I should open up a fund, but again, I'm not licensed or anything. I thought about it, but really, honestly, I love teaching, and I want you to be the captain, right? I want you to be the captain. So that's kind of, I always kind of go to that thought process. I want you guys to learn, right? Because then you guys can teach your children. Because if I just do it, you know what I mean? Like, it's just like, well, who's it going to help, right? It's just going to help you and your family, but yeah, but like, if you teach your children, they can be like me. Holy shit, right? And they can be like me. There's not some level. Listen, guys, I'm creating a lifetime access that my children are going to be using. I'm honestly considering having my children go to my lifetime access university that I created versus the college. I mean, Shinitsky said it, right? He said it. He said, this is like a college. Yeah, it's better than college. This shit's on Harvard. Right? I've been to Harvard. Okay. This shit's on Harvard. Okay. So, all right. And then people at Harvard cite my scientific work. Isn't that funny? People at Harvard cite my scientific work. Right. That's right. And yes, I am flexing. I am flexing. Right. It's really cool. I went from homelessness. They're citing a former homeless man. That's what I'm talking about. All right. Only in America. All right. God bless the United States. All right. So, okay. So then now let's go ahead and let's focus a little bit on, uh, oh, let's just take a little tangent. Let's talk about Drew. Drew, you remember the On shoes you were talking about? You did exactly what Peter Lynch said. Oh my God. Like, just, right? Just, I just want to kiss you on the cheek. Okay, brother? You're Italian, I think, right? So it's a nice little kiss. All right. Now let me explain to you why I want to kiss Drew. Okay. Let me show you. So Drew went to Europe or something. He went to Europe, so, On brand shoes. Okay. And he was like, a lot of these healthcare providers or something, a lot of them are like wearing these shoes. Have you recognized someone who wore these shoes? He's like, man, these shoes are being worn a lot, right? And uh and he's like, well, you know, let me look at the balance sheet. Well, first off, let me look at the stock. On stock. And he looked at it when it was, I think, around here or something. And he went ahead, looked at it, went to the terminal here, and he looked down and he looked at it and he said, well, wait, this is On Semiconductor. No, wrong stock. Oh, this is on. Hold on. You see how I immediately knew? Once I saw, and by the way, On Semiconductor was a stock that we talked about, and I think on our semiconductor stocks. Here it is. It's like an onion. Like it's what's called an onion or on. Weird. Okay. So there it is. Yeah, there it is. You see, and he talked about it, and he like saw it. It was here, and then and then it pretty much basically took off. Right. It became like a 2 to 3 bagger. Right. So watch this. Watch this. So he goes here and he types in on. I just forgot the other on. And he saw that operating cash flow turned positive in 2023. Let me zoom in here. Free cash flow turned positive in 2023 and net income turned positive in 2022. So it became a triple dragon by 2023. So what happened once it became a triple dragon? 2023 was its lowest. So you go here and then the stock pretty much exploded. Now let's go ahead and probably conduct an intrinsic value calculation on. And you go in and you say, okay, well, the free cash flow of the software is saying 53 million. It's currently at now, 184, 445. I mean, this thing is crazy, right? But let's go ahead and take a look at the free cash flow for the quarterly. A couple hiccups there in Q1, but ultimately pretty strong free cash flow, if you ask me, right? So we could just be humble here and we could take kind of the 200 to 450, We'll call it 200. But you could see automatically it's $46 is the base case, and you could see $42 of stock price, right? But if you were to do just 200, let's call it 200, and then we have to look at the growth rate for on. Is the growth rate slowing down? Growth rate's still strong. So it's saying 20, let's call it 25 is the growth rate. It's still one of those crazy stocks that are like strong as hell. And it's the market cap is 14 billion. You would have to take a look at other stocks too, ASICs or whatnot. But back in the day, it used to be here, so it was a lot smaller. And if you can kind of grow it, let's call it 250, you could see ultimately that this could have been the value, and 35 to 51. But if you do this, 71 is the best case. Has it gone up there before? Yeah, you see $64, right? So what happened here? Right? What happened? Right? He went ahead, saw a shoe that everyone was wearing, said, let me look at the financials. Holy shit, just became a triple dragon. Intrinsic value, pop, right? That's what Peter Lynch is pretty much talking about. Okay. Right. That's what he was basically trying to teach. Okay. And the problem is Wall Street, like, doesn't have the, like, an intern or a, like, everyone's trying to make a name for themselves on Wall Street. And the problem is you can't buy small stocks without risking your career, and you'll get fired. That's just how it works. Right. But that's an advantage to you. Okay. So let me explain. Okay. Let me explain to you. So let's kind of break this down. So let's say, for example, you buy NVIDIA. Okay. You are a hedge fund manager, right? You're an intern 40 years ago, and they give you a fund. It's like $50 million or 100 or $200 million. That's your fund, right? What are you going to do? Right. If you buy NVIDIA and then the NVIDIA stock goes down, they're going to, your boss is going to look at you, is going to be like, hey, dude, what the hell's going on with NVIDIA? What's wrong with them? Right? That's Peter Lynch's words. Like, he used IBM as an example, right? But if you buy for La Quinta, La Quinta hotels, Peter Lynch was talking about La Quinta, but let's just kind of just use an example here. If you buy, let's say Clover, and Clover goes down, they're not going to say, hey, what the hell's wrong with Clover? They're going to say, what's wrong with you? The analyst, right? The guy who's managing the fund. What's wrong with you, dude? So what ends up happening is Wall Street doesn't step in until the story has proven itself to a point where it's undeniable. And that's when the stock shoots up. Look at Palantir, right? A good example is just going ahead and taking a look at Palantir on institutional ownership here. You can look at Palantir here and look at the long range here. This is a beautiful software with the AI that you can have lifetime access to, large language model, beautiful AI analysis that you can have access to, and it's really beautiful. And you can use this right now. It's live for members and projections and whatnot. All right. So here's the thing. Look at investor holdings. Look at how many investors started just piling in. Investor holdings is in blue. Investor holdings was kind of stagnant. And as soon as it started becoming profitable at Triple Dragon, it literally started to explode. And what happened to the stock price? It literally went ahead and exploded with it. Okay. So the point is once a company proves itself, then ultimately it's going to, by the way, it's really humid out here, guys. Holy moly. Once the business improves itself, and it's Triple Dragon and it proves it, then it goes to another level, and mosquitoes are killing me. Stupid freaking mosquitoes. Whew. Okay, sorry. I'm getting bit. I wore some nice cologne, and the mosquitoes are giving me kisses here. Okay, so let me think. We talked about that. We talked about this. Talked about Peter Lynch. Anything else I want to? I'm talking to myself right now. Anything else I want to talk about Peter Lynch? Anything else? Let me think. That's good enough all right, that's good enough. All right, now let's go ahead and let's just talk about these little things I wanted to mention. Okay. So we talked about this. Benjamin Graham went ahead and started talking about, he taught Warren Buffett about the margin of safety. I'm just going to go ahead and I'm not going to read off of this. I'm just going to just guide my mind to talk. So Margin of safety is, let's say, for example, a stock is worth, let's say, $25, but then the stock is at $5. That's a margin of safety. It's like, it's hard to lose money on that, right? You can, but you want to go ahead and buy an undervalued stock. What is undervalued goes back to our discussion with intrinsic value. But the beautiful part about this is Benjamin Graham taught Warren Buffett about margin of safety. Okay. Then came Philip Fisher. Philip Fisher was like Charlie Munger, right? He said pretty much like Philip Fisher taught Warren Buffett and said, listen, Warren, you don't need to buy the most shittiest undervalued stock, right? You can buy a great company at a fair price, right? And like, for example, when Warren Buffett bought See's Candy, it was trading about 2 times book value. And Warren Buffett bought it at around 10, 20 million or something. And he was like, man, this is way expensive. But then 10 years later, it was somebody offered him Charlie, by the way, Charlie Munger, shout out to Charlie. He said to Warren, buy it. And then 10 years later, someone offered Warren Buffett See's Candy. He offered him 125 to 150 million. Warren Buffett declined. He said, no, I'm okay. So Warren Buffett learned a valuable lesson about being able to buy a great company at a fair price. Just a quick tangent. Shout out to our CFO, Peter Coopers, I think. He very nice man. I see him always learning on LinkedIn about Jamie Dimon. Smart guy. Okay. So now let's go ahead and talk about something that Peter Lynch said. Okay. Going back to something I didn't talk about. So this is actually quite interesting, guys. Let me just take a little sip here. All right. So let's talk about this. Okay. This is pretty cool. So Peter Lynch talked about how people do more research on a microwave purchase more than they do stocks. Think about it. Like when you go buy a house, what do? Right? You go check the neighborhood, check the churches, check the schools, check to see that this is not the most expensive house on the block because you don't want to be that person. Then you go in, look at the attic, look at the cracks to see if the house has been maintained. Then you go hire professionals for looking for termites, looking at the pipe, looking at the AC. You do all this due diligence, right? From first principles to make sure before you buy a house. You think people do that for stocks? They don't do any of that for stocks, but imagine if they did. Imagine if they looked at the business. Imagine if they understand what the business does. Most people that invest in stocks don't even know what the company does. What the hell? Right? And they don't do that. And it's quite interesting. They just go ahead and swipe up or call their broker, right? Back in the day, right? So, and they still do it to this day. They don't even understand the business model, right? So if you were to do the same thing you would do in buying a house into essentially buying a stock, I think you would be a lot more successful than most people. Okay. And the issue is people don't know how to access the data. And that's kind of what I was stumbled upon. I was like, yeah, I can have a course to teach this, right? But then I realized, I said, no, man, I need to build the software. The software needs to be built. And that's why we have a stock terminal now. And it's funny because Peter Lynch designed the stock shop. And if you want access to the stock shop, apparently now you'd have to spend $20,000. And that's a stock shop created in 1995 without AI, without all the advanced tickers and all this other stuff. Right. So, right. I wish I was able to, I don't know, maybe I might work something out with Fidelity in the future. Right. So, so that's kind of the story with Peter Lynch. Okay. And another thing I wanted to go ahead and I'm going to read this one because this has numbers. I'm going to put on a jacket right now because I'm getting squashed right now. So hold on. I want you to read this. Okay. All right, just wore a nice jacket here. Let me just let me go ahead and just turn on the camera here. Hold on. Okay. There it is. Okay. I think we're good now, right? Don't know. It kind of just followed. Yeah, I think the camera followed me and I was like, "Where'd you go?" Yeah. So, all right. So we're back. We're back. All right. So okay, we're back. So let's go ahead and read this. Okay. So Peter Lynch shared some important lessons about the dangers of timing the market, and there's like a lot of people are fighting me on. They're fighting me on like you Twitter. They're like, "Oh, you can't time the market. Let me show you a study." And it's like they show me a study from a guy on Reddit, and I'm like, "Dude, get out of here, bro. Seriously." They're trying to convince me, I'm going to listen to these billionaires and millionaires rather than, some guy, right? So confident and stupid. If you're confident and stupid, there's no hope for you because you're so stupid and you're so confident that you don't, and you're so stupid to realize how confident you are. Hold on for a sec. Hold on. Ugh. Okay. Just wanted to adjust my position here. Okay, so Peter Lynch talked about how many people believe they can avoid losses by pulling out of stocks before downturns, but the truth is nobody can reliably predict when. I'm reading right now off of this, right? When those downturns or the rebounds will happen. To illustrate this, he gave a striking example. Imagine investing $100,000 in the stock market in 1994 on July 1st and simply leaving it there for 5 years. By staying invested, that 100,000 would have grown to $341,000 approximately, a little more, but if you had stepped out of the market for just 30 days, during the same 5-year stretch, that 30 days when the stock market made the biggest gains, your money would have only grown to $153,792. Insane. Insane. Okay. We're talking about a double here, guys, more than a double. Okay. The point is simple but powerful. The biggest gains often come right after the toughest declines. Think about it. Stock Clover Health dropped to $2.14. Vivek bought, it jumped up to $3, right? And missing just a handful of those days can cut your returns dramatically, right? The real reward comes from staying the course and letting compound do its work. This is why Lynch emphasized that long-term success in the stock market does not come from trying to jump in and out of the right time. Instead, it comes from patience, discipline, and an ability to ride those ups and downs without panicking. Um, what else? So we talked about that. Yeah, we're at a breakout right now. We'll see what ends up happening. We'll figure it out right now. Peter Lynch had this great quote in the book. He said that stock market demands conviction as surely as it victimizes the unconvinced. You really have to have conviction. That's why, like, people say, "Oh, give us your stock picks and whatnot." Dude, it's not going to help. Okay. You're not like, okay, fine. Let's say somebody out there gives you stock picks, right? And the stock drops 50%. What do you're going to sell out because you don't have conviction. You don't know what you hold. You're just blindly following the masses, right? And that's what people did, right? They just sell, right? Especially when other stocks go up. What else? Oh, bond market versus stock market. Oh, this is a good one. Okay, this is a really good one. Okay, so think about it. Okay, let's give an example. So inflation is around 2 to 3%. If your bond is only paying you 3%, 2 to 3%, let's say, bonds are a little higher now, but inflation was high as well. But if your bonds were playing 2 to 3%, then you made no money. Your money is just going up with inflation. So the stock market in the long run will actually outperform the bond market. Now, in the short term, like if you happen to be in the 80s, when the bond market paid approximately 16% for a bond, then you would have 16% for 20 years, 30 years. Like whoever bought those bonds made a shit ton of money. Now, of course, the stock market um, makes money too, but imagine 16% compounded. That's that's fucking good, right? So I'm waiting for a future, and lifetime access members, you'll never be able to predict the future, but you can use the past to learn how to react to the future. So in the future, we are going to get inflation that's going to bring us back to 15, 20%. It's going to happen in our lifetime. And there's going to be a lot of these dumb kids that don't know what the hell they're doing. They think like, they need to buy the newest iPhone because that's surely the new stuff has the information. Like, think about it. All these podcasters that you listen to, like right now, you're listening to me, right? We get our information from the old textbooks. Okay. All these like big YouTubers that like speak out this bullshit, they get all this information from these books, right? They don't tell you where they get the information from. I'm a scientist. I am a true scientist, right? I am a legit, true fucking scientist, right? I tell you exactly where I get my information from, right? Because it's called citations. The references at the end of the fucking paper. That's what I do, right? But a lot of these people, they try to act like they know what they're talking about, right? They're like, oh, they're talking like Peter Thiel, but they don't tell you they read Peter Thiel, right? Right. So let me just make sure. I'm gonna check the drink right now. My pet peeve is there's no bugs in here, so I can drink. Hey, right. So all right, hold on. Sometimes in Arizona, it's Arizona, right? So a lot of people don't tell you what the information they read from. They want you to think they're a genius. I'm no fucking genius. I just listen from these greats. I just read. I get this information. I'm no genius. You can do what I can do. What differentiates me and you is discipline and consistency. Discipline and consistency. That's it. That's all it is. I have a brain. You have a brain. That's it. Okay, send him. So we talked about that. Um, Peter Lynch talked about one thing that I disagree with. Partially, I disagree with it about 25%, maybe 33.6% or whatever it is, 33.7 or whatever. Let me explain to you. So Peter Lynch said, before you go into stocks, you have to ask yourself 3 questions. He said, do I own a home? If you don't, then you don't have a stable foundation. Now, in some cases, if you're in California or New York, it's actually cheaper to rent a home. And a lot of people are actually renting homes and investing in the stock market. That's kind of the reality we're in right now. And I think that might be the winning formula because homes are a little bit overvalued right now in some areas. The second question, I agree with this question. Do I need the money soon? The answer is if yes, then the stock market is not the right place. If you need the money soon, dude, if you're investing in the stock market, you're stupid. You're stupid. You are stupid if you need the money soon and you're investing in the stock. What do you go to casino? You're stupid. Do you have the right mindset? If you're not patient, if you're like erratic, if you have like problems, then the stock market's not for you. Right? You're gonna lose your money to people like us. Okay, be careful. Okay, I'm teaching you. Listen, when I'm an asshole, when I'm like trying to be asshole, I'm playing a character. Like think of like Mr. Vince McMahon. But I think Mr. Vince McMahon forgot that he was playing a character and he became that character. But when I'm an asshole and everything like that, I'm teaching you how Wall Street thinks because I know how these people think. Right? Not the public facing people, but I'm talking about the people in the background. Okay, people, this mosquito got me, man. People in the background, they don't show their faces. I've seen those people, dude. I've been in those rooms. These people don't give a shit. We're talking people that have generational wealth. You don't even know who they are. I don't even know who the hell they are, but they have like billions of dollars, billions of billions, right? These people don't give a shit about you. They don't give a shit. They don't care. They don't give a shit about you, right? Right. So, but they influence you. They influence your life. Okay. I'm just giving you kind of the right. All right. So, we talked about real estate. That's good. Read, educate yourself. Read. It's okay. I will give you the information to a point where you don't even need to read the book. It's that good, but I recommend still reading the book because you're probably going to get something out of it that I didn't, maybe because I'm limited by the lens of my own eyes, and my brain might be limited. Um, uh, Probably not now, but maybe in the future. But I would recommend reading, just to become your own master, right? So I would recommend reading it. The platform is it's gonna be comprised 95% of. I'm probably like I'm gonna miss 5%, but that 5% is gonna be fluff. I'll give you an example. Here's some fluff. So Peter Lynch went to the Seagull Hotel. Let me just give you. It's in Ireland. This guy knows how to. This guy knows how to travel. All right, let me show you. So the Seagull. This is the stuff I didn't talk about, but hold on. Let me see if I can find the hotel. Hold on. I'm gonna find you the hotel that Peter Lynch went to. It's a nice hotel. Give me a moment. I'm searching for it. There it is. I spelt it wrong, but I have it here. Let me show you. Ireland is beautiful, man. Shout out to all the lifetime access members from Ireland. We have a lot of Ireland lifetime access members. All right, we're everywhere. It's crazy. Like everywhere I travel now, I am within an hour of in any major city. I'm within an hour of a lifetime access member. Like holy shit, right? Like, and all I want to do is like give you guys the best value. You know what I mean? Like it's crazy. So anywho, Dingle Seagull Hotel in Ireland. This is what Peter Lynch visited. He mentioned it in his book. I'm curious to see does the world know about this, that he visits this hotel? There's no public renowned investor. Yeah, so he never talked about. You see, this guy is Peter Lynch too, right? No, you see, this is the stuff that you'll never you got to read the book, man. It shows you how history forgets itself, and Google doesn't know, which is kind of weird. But this is a very humble $200 a night. It's not bad. You would think it would be like $800 to $1,000 a night. I've stayed at more expensive hotels, which is crazy. Maybe the dollar of Ireland. I don't know. Is the dollar stronger now? I have no idea. But look how beautiful this is, guys. This is this hotel that Peter Lynch went to, and apparently, man, that's so freaking amazing, dude. I want to go there. Like, who wants it? Maybe we should have our summit here, dude. We can have our summit in Ireland. Surely it's a lot safer than the U.S. Dude, look at this. Look at this. So beautiful. Freaking Ireland, man. I've never been to Ireland. Look at that. Let's see this video. Wow. It's like a bunch of green and water. Wow. Something that Arizona is. We don't have this in Arizona. I don't know what the hell this is. Green and water. What the hell is this? Man, I want to go there right now. Damn. Anywho, so Peter Lynch, B Rob, I could function on Al's hours, but it would require some crystal meth. Ooh, man. No, man, just get some of this, it's nice, no sangria. Mm-hmm. I don't advocate drinking alcohol. Any dosage of alcohol is cancerous, actually. That's what I learned in med school, which is crazy. Any dosage. There's no healthy, safe dose of alcohol. Unbelievable. Like, what the hell? All right, so Peter Lynch went to Ireland, and when he went, as he said, every time he travels or he gets a promotion, the stock market crashes. So he went to Ireland on October 17 or October 19 of 1987. Again, it's all in here. I don't know. My brain just, it just remembers. And that's when there was a big crash in the market. And then Peter Lynch was talking in his book. He said, I couldn't tell you what I ate that night when I was at the resort. He said, cod and shrimp taste the same when your fund is down $2 billion, the size of the GDP of a small fishing nation. So, yeah, I'm not going to talk about those types of things, but I do recommend reading a book because it's those type of quirky jokes that like make you like know Peter Lynch. It's like you have like a relationship with him. It's like you're there with him. Listen, guys, I know I'm gonna sound a little weird, but when I was homeless, I used to read at the Hayden Library and the Tempe Public Library, and I never traveled to the Taj Mahal. Or the hardest part about being homeless is in the summer, like, or not, sorry, in the Thanksgiving, summers too, but when people travel, when families travel. But really, the hardest part about being homeless, like when you don't have family, is during Thanksgiving when families get together, during Mother's Day, Father's Day, but also during hardest part is during Christmas, because then kids get gifts, because you're a kid, you know what I mean? Kids get gifts, and you see like the kids get gifts, and then it's like, you don't have anything, and it's like that was the hardest for me. What helped me, what helped me kind of ignore that and just kind of forget it, like just kind of forget about it, um, was not drugs, right? It was not crystal meth, right? No. Imagine like I like Dave Chappelle. It was crack, right? No, it was crack. No, what would help me forget was reading a book. It was so weird, guys. When you read a book, it's like you have like it's like you're there. It's like you're literally there. When you read a book, it's like you close your eyes, man. It's just like, I used to go to bed and I used to kind of close my eyes and just kind of think of the book. It just, yeah, it's, I don't know. It's just, that was like my travel, right? That's what I could afford. And it was the best vacation ever, right? It allowed me to become who I am now. Same thing with Peter Lynch. I'm reading this book again and I'm experiencing the same thing. I was telling Michelle and she was like, what she told me? She's like, she's like, you're a freaking nerd. You're a nerd. I was like, you don't get that feeling? She's like, I don't read books. I was like, okay, well, all right, that's fine. But anywho, yeah. So I'm not going to talk about the quirky jokes. Sometimes I will, but like these are the types of jokes that you're missing out when you read Peter Lynch's books or any of these books. You miss out on their humor. What makes them human? You know what I mean? So anywho, that's about it. Right? Nerd for life. I mean, really, it was in the name, wasn't it? I wasn't lying. Right? Love you too, B Rob. Love you a lot, man. All right. So we talked about this. I'm just going through the tabs to make sure I got everything because this is very important. Um, I don't know if you saw my eye go that way. I'm like, I think I heard a rattlesnake. We're in the desert. Heard a rattlesnake. She's like, shut up. I'm trying to go. I'm trying to enjoy my morning here because it's their like morning. Okay. So let me think. Okay, we got that. Okay, we got that. Oh yes. Okay, good, good, good. All right. So you know what I find interesting? So Peter Lynch talked about in 1982, before American stock market entered a great bull market. 1982 is when the stocks started to drop. 55% of advisors were bearish. Then by 1987, 80% advisors were bullish right before the stock market crash. Remember I told you in October in 1987, he went to the Ireland hotel and that's when he lost like $2 billion and he couldn't remember cod between shrimp and cod the taste. It was kind of fun. It's kind of funny. It shows you that these hedge funds also get scared too. So if you can be like more smart, like stronger than them, they would bow down to you. Okay. It's pretty cool, right? So think about it. When 55% advisors were bearish, when we were in the start of a bull market, it was a great time to buy. So now let's go ahead and just kind of say it in a different language. So in 1982, just before the bull market began, majority of advisors, 55% were bearish. They were negative on the stock market. Now fast forward to 2025. Let's fast forward to today, right? Because that's the whole goal is how can I use this information? Like, how can I use Peter Lynch's information and to help us today? So if we fast forward to today, the most recent AAII investor sentiment shows about 49.5% are bearish and 28% are bullish and 22% are neutral, 22.5. So isn't it interesting that there are currently more bears than bulls? To me, that suggests that we are in the early stages of a bull market. Insane. And that's how money is made. That's how money, you know what's so cool? Like right now we have about 126 people watching on X and 27 watching on YouTube. Holy shit. Right, altogether 153 people together. I mean, that's crazy, guys. Like, we can all share this knowledge together. Oh, right. It's just, it is so cool, right? Because like I wish I had this when I was young, because I had so much knowledge I wanted to share, but I was limited by the technology that I had, right? Now I have all this tech and we have this fast internet. I'm not even connected to an Ethernet spot right now, right? I can't wait to visit Ireland, man. I'm definitely going to visit that hotel. I'm going to make a live there. Hell yeah. Right. In honor of Peter Lynch. Uh, he's a good man. He's a very good man. Okay. So, to all my doctors, I'm making like a presentation for a couple of events, but I just wanted to share this to all my doctors. There's something called the altruism trap. And I made this, beautiful thing here. There's something called an altruism trap. Um, and they kind of like force feed us this. I didn't go into medicine for the money. If you're talking about money, you shouldn't be a doctor. A typical medical student response. Now, again, how corporate America exploits this? Well, it uses altruism to justify lower compensation. That's why a lot of doctors are compensated low in comparison to how much work they've done. Pits physicians against each other, right? Like a surgeon versus a family medicine doctor. Captures your RVUs while you work on the treadmill in the name of altruism. Promotes service while extracting profit. Makes you feel guilty for wanting fair compensation. The reality is you can serve patients and build wealth at the same time. They're not mutually exclusive. Don't let corporate America use your noble intentions against your financial future. Okay. We're going to be talking more about that in the future. I just kind of wanted to kind of drop that in there. Now, in regards to, you see that little thing right there? You see that little red part right there? Right? That's a mosquito. Mosquito gave me a effing kiss right now. It's itchy. All right. So, we're going to be talking about this on the next video. It's already been an hour. So we're going to be talking about this in terms of Humana, where I see it, after basically, because I think right now we did a really good job with Peter Lynch, right? We did a really good job with Peter Lynch. And I think like this is very good, right? And if you like read the book right now, you'd be like, oh my God, he just literally explained to me the whole book, right? Don't go. No. I'm getting bit, man. I'm getting hit, dude. I'm getting bit up the ass right now. Okay. So for folks out there, we do have our sale. It will be expiring soon. I think it's going to be expiring by the end of this week. So take advantage. It's the SAS coupon code. Take advantage. Will be expiring by the end of the week here. Okay. To be quite honest with you, I talked to Linda and I was like, hey, is that coupon code still going? She's like, yeah, I don't think there's a stop date. I'm like, what do we do? I was like, what the hell? No, we gotta stop it. So it's gonna end, or it's gonna end the end of this week. Okay. So she hasn't done it yet, but she's gonna be putting it in. Okay. And then we're gonna be raising our prices in the new year. Okay. Just so we, full transparency. I think I got bit up in the nose right now. Do you see a mosquito go in my nose while I was talking? Damn, it's itchy. must have went up there, I don't know. Who knows? All right, but yeah, love you guys a lot. At the end of the day, I know my videos are not the best in terms of like the editing and whatnot, but I promise you guys the information is gold. Okay, the information is gold. This is some good information. Okay. There's going to be a lot that we're going to be doing, and I just can't wait. Like, remember I told you 2024 for Clover was the proof of concept year? By 2028 to 2030, it is going to be the wealth solidification year, to where This is my hypothesis. This is my hypothesis. I believe by 2028 and 2030, you know how I said 2024 will be the proof of concept, right? So by 2028 and 2030, that will be the year where your social class, where you are in your social class, is going to be shifted vertically. There's going to be a huge vertical shift in your social class, excluding recessions and all this other stuff. But there is going to be a shift within your social class. The people around you are going to look at you and they're going to say, did this guy just win the lottery? Has there been a shift in this person's social class? You're going to be looking at yourself now in 2025, from 2028 and 2030. You're going to say, holy God. There's one thing though, because I know sometimes I'm like asshole, right? I'm only playing a character. I'm playing like the Wall Street character, right? Don't forget where you came from. Okay. You can have all this money. Don't forget where you come from, because at the end of the day, you know, you could have all the money in the world, but if you get like terminal cancer or something like that, money will not get you happiness. Okay. I always like to make a joke like, oh, whoever said money doesn't buy happiness, that person needs to make more money. I make those stupid jokes just to kind of like poke at my liberal friends. I got a lot of liberal friends. Okay. I love to mess with them. They like freaking like, they like freak out, right? It's like that lady, right? That right? They freak out. I like to freak them out because it's fun. It's fun. I don't know. I'm an asshole, I guess. Maybe I'm an asshole. But again, it's all for shits and giggles because they like to poke fun at me, right? Especially when I talk about neuroeconomics. They always make fun of me. But it's fine. It's okay. We can make fun of each other. But just don't forget where you come from. Don't forget who you are. Money doesn't change who you are. Okay. But the next 3 to 5 years, that your social class will change. You will be at a different level. And a lot of people are going to retire. And for the people that do retire, I hope you still stay with us and join the mission. And hopefully we can get this information in front of kids, because it's not how much you have. It's what you do with what you have. It's what you do with what you have. Like, I'm here sitting in the country club. I can go relax. I can go enjoy myself and go relax and shit. But like after like a year, isn't that going to get boring? Isn't that going to get boring? Like, how many? Like, I want to bring all of you guys here so we can all relax together, right? Because I want you at the mountaintop with me, right? Because I'm fucking lonely. Okay, I want it sucks knowing all this information. Like, I'm so fucking lonely, guys. It is so like having all this information is so isolating. It's like you see the future, and you have all this knowledge, and it's like, fuck, dude. It's like you talk to people, and they're not. Like, when I talk to some people, it's like I'm speaking to people like from the 1980s, man. It's like it's so hard. You know what I mean? Like I feel like my dog understands me. I don't know. It's just, so I'm trying to bring you guys with me so we can enjoy life together. Because like doing this alone and like having all this money and shit, like doesn't buy you happiness, right? What buys you happiness is seeing someone else lifting them up, and then hopefully you do the same. Okay. B Rob here. I learned a lot from you, Al. You have made a positive difference in my life, and I will always forever be grateful. Thank you for sharing yourself with the world. You are a good man. I appreciate you, man. I appreciate you, brother. I'll be at the country club with you. Hell yeah. It's what you do with what you have. Absolutely. Right. It's what you do with what you have. Right. It's not, who cares about how much you have? You could have a slice of bread, and that's all you got. And you see someone next to you and you break that slice of bread half. And that's good. That is beautiful. Right. That is beautiful. Right. That's what Jesus would do. Right. That's beautiful. Okay. So God bless you guys, and I'll see you on the next one.